Hi, good evening. Today is January 27th. A lot to talk about. I hope that people paid attention to Victor's warnings for the last 2 days in our video because today S&P 500 was down 2.6%, and even more after hours. It was down 160 points since the high made yesterday. It was the biggest loss since October. And Nasdaq was down as well, over 3%. Even Tesla was down after hours a few percentage points based on a rare earnings miss. Even selling more environmental credits didn't help them this time around. There are multiple reasons for today's sell-off. We talked about it a few times for the last few videos, and another reason today was that the shorts were squeezed yet again, and hedge funds were forced to liquidate their favorite longs, the most liquid longs, to cover their margin calls and losses for the shorts. An index of the most shorted stocks in US was up a stunning 54% in January, just January alone. And the whole last year, it was up only 49%. So it was up, the most shorted stocks are up just this month more than the whole last year. And that alone was a record territory. Rumors are that Melvin Capital, which we mentioned the other day, which was heavily short GME or a GameStop stock that's been in the news, is going to file for bankruptcy next week. I don't know if that's true, but 2.7 billion bailout apparently didn't help them, given that GME stock keeps going up. And now that the sharks are smelling blood, they're going after all other shorts that Melvin Capital has. And Melvin and Citron capitulated on the GME stocks, but there are other funds that took their place shorting because the short interest is still very high. And now there are rumors that hedge fund Maple Lane lost over 33% on their short bets this month alone. And so the short squeeze continues. Even though today multiple entities are trying to put a stop to Robinhood traders shorting, most of the retail brokerages were suffering outages this whole day today. And in addition, with the SEC refusing to interfere in this, and rightfully so, refusing to bail out the $1 million hedge funds who are still trapped by the short squeeze, the exchanges have decided to put other restrictions, and now there are restrictions on trading GME, AMC, and other highly shorted securities on most of the brokerages. Even IB limited transactions to closing only trades. Not that it matters because the option prices are so insanely outrageous. For example, AMC stock, $10 March put option was quoted for 12. So even if you buy it, you're gonna lose money if the stock goes to zero. $10 March puts are selling for $12. It's insane. So notable short squeezes today were, of course, AMC. Like I mentioned, it was up 70% after hours yesterday, but today it closed 300% up. Let me repeat, over 300% for almost bankrupt company. And Sears, which are bankrupt, was up 130% today. KOSS, which is a stereo company, was the winner today with being up on a close basis 480%. 480%, plus additional 60% up after hours. It's the company that was $6 on the close 2 days ago. $6. And now after hours, it was $96. So that's 1,500% in 2 days. And the winner is another blockbuster liquidation company, which was up 4,900% in the last 2 days. So who needs Bitcoin? Who cares about Bitcoin, which was briefly dipped under 30,000 when you have stocks going on thousands percent a day? So all the smart money apparently are moving in into all of the meme stocks. And just again to reiterate the warning that Victor keeps saying, do not short the stocks. Because here's one example that was going on Twitter. There was the guy who was short GME, and but he apparently hedged by being long other stocks that ago, and he was in the money. But in the morning yesterday, when the stock market opened, his brokerage has decided to increase all of the margins on all of his positions. So just because he was up on some positions didn't really help him, and he was liquidated. He was short GME calls, and he liquidated by the brokerage right on the open. And he got, of course, a terrible price at $40 versus the his position was trading at $20 just a few seconds later. So once again, do not short these stocks, however tempting it might be. Now that you do not necessarily even can, because all of the options right now are halted in major brokerages. And at the same time, multiple famous personalities are weighing in on the situation. Stephen Cohen, who is founder of Point72, who bailed out Melvin Capital, apparently was taunting Robinhood last night. He said that rough crowd on Twitter tonight. Hey, stock jockeys, keep bringing it on. I don't know what he means by this, but I don't think he's feeling too good today. Also, Michael J. Burry, who is known for his shorting of subprime crisis and making a lot of money, he came back to Twitter also with a warning. He is long GME, but he tweeted yesterday, I put GME on your radar, and if you did well, I'm happy for you. However, what's going on right now, there should be legal and regulatory repercussions. It's unnatural, insane, and dangerous. Um, and of course, CNBC today was really upset that Robinhood is making a lot of money. They had the billionaire venture capitalist Chamath Palihapitiya, whose name I still couldn't pronounce since yesterday. He closed his GME calls today, making 7 times on his investments, and donated this all to charity. But he was invited by CNBC and grilled and kind of admonished for stirring the pot, to which, of course, the Wall Street bets traders got even more angered, saying that it's okay for the billionaires to talk among themselves and make a lot of money, but when an average person makes some money now, all of a sudden, the powers to be are trying to stop it. And Dave Portnoy also came to his defense on Twitter, saying that only if CNBC cared about protection when it's the establishment, then getting their teeth kicked in. As long as the big banks are winning, the stock market is great. The second retail traders take the wheel, it's unfair. So it's a whole big game that's going on between the hedge funds and the Robinhood traders occupying Wall Street. Even White House economic team chimed in because they were asked and said that they're monitoring the situation that's going on with GME and AMC. I don't know which world we live in, the world of memes, where White House cares about some stupid gaming stocks. And of course, Zero Hedge had a funny line, will someone please protect the poor hedge funds from the retail mob as Robinhood traders and Wall Street bet bros occupied Wall Street? Even NASDAQ threatened today to halt all of those stocks that have chatter on social media. NASDAQ president said that they're monitoring social media chatter and will halt stock if we match chatter with unusual activity in stock. Even Jay Powell was asked a question about the GameStop, but he declined to comment. And speaking of Jay Powell today, the whole FOMC was overshadowed by all of that short stock activities, but he was warning that recovery in job market has moderated, but he said that the Fed is going to remain accommodative until the goals have been reached. And it's too early to talk about dates of tapering. So like I said, it's all become a joke, a meme. And the GME is still going up in, insanely. And for example, the this Friday expiring $450 calls on GME were trading at $75. So I don't even know why GME just doesn't sell more stock at open market to raise capital. I'm hoping they will and will in coming days. But today it was up another 140%. And Wall Street bets boys are saying, do not sell. They're hoping for 1,000. And they're also getting smart and telling all of their followers to let their brokers know so that they do not allow their shares to be available for borrow. And they are saying now that this is the true Occupy Wall Street movement, and they're hoping to change the markets forever. And whether they will or not, it remains to be seen. But I think some changes will definitely be made. And now that Biden is monitoring the situation with GameStop as well, we will see what happens. And just to finish up, I think we have reached the stage of financial nihilism, where nothing really matters. Money is not real. Money is just a social construct. Value is meaningless. Robinhood has occupied Wall Street. And gamers who have nothing to lose, they have forced hedge funds bankrupt while they have paid off their debts with parlaying money into GME calls and other bankrupt companies. So we live in an interesting world these days. Victor, what do you make of all of this?
Well, your review of things is very exciting to me. I wish
Yes.
I were privy to all these very exciting details that you speak of. The only thing that I base my trades on are general principles and scientific quote regularities. I try to sometimes espouse some general principles. One which I have espoused with you, which I hope our meager listeners listen to. It's never short. Don't ever short anything. Not a stock, not a put, not a grain. And one of the reasons is because of the thing that happened to that investor that you
Right.
spoke of, that he received a margin call, didn't have a chance to meet it. He received a price half of what it was trading at.
Right.
But when you're borrowing something from everybody, and they can, which you have to do when you're selling short, and they can decide to call their stock back, you're in a very vulnerable position. In addition, when you borrow stock, you usually have to pay a percentage.
I think it's insanely high, like 30% right now for GME, the borrow fee.
That is, but within all this madness, there is an underlying regularity, which we have discussed, which is that the infrastructure, the market is designed so that the infrastructure profits, that the strong, the very well capitalized levels profit at the expense of the weak. And we stated that everything was topsy-turvy, that here were the company, here were the public that's mainly into these penny stocks and the ones going up the most, and they're making money. And some of the biggest market makers, the biggest hedge funds, are losing. So
Great.
it was natural that the Fed today would do something to reduce the gap, to prevent the top feeders from losing money, trying to hurt the small investor, the public. And they did a very good job. For your information, today was the 5th largest decline ever. I'm talking in absolute.
Right.
There were some declines in March 2020 in the 200-point level, but only 5 declines of this magnitude in history. And then the market dropped to 13,506, excuse me, to 3706. And guess what?
Great.
That's a decline from the end of the year. The market was lower than it was at the beginning of the year, when it was 3750-ish. NASDAQ still up 2%. But there was a nice decline in NASDAQ today. It was down about 3.5%. And Facebook and Apple and tech. They reported, Telsa, they all reported after the close. They all beat their estimates and they were all down.
Right.
Facebook in particular was down $10, 3%. Tesla was down $18, 2%. And Apple was only down 1%. There's been an unusual phenomenon now in the last month and during this earnings season. The companies that beat their estimates are down about 2% after beating their estimates. Usually if they beat their estimates, I mean, that's one of the shibboleths of one of the mistaken beliefs on Wall Street, that when a company beats their estimate, their stock is a buy. Value Line and Zacks. And the general consensus follow that. And of course, anything that the public follows is generally bound to lose money for them. Well, the market took a tremendous decline at the close. You went from 3750 to 3716. went down 1% in the last 15 minutes. But then from 4:15 to 5,
Right.
it went right back up. So now it's down 105 on the day. By the way, the same way that the constructal numbers like 3,800 and 30s, the 50s, the Soji numbers, that they exert a gravitational impact on things. The prices themselves have a mind of their own, and they transmit their activity to their descendants and to all other companies that are related to them. The prices themselves are selfish, and the decline, the number 100, a decline of 100 becomes very significant. So the market was down at the most, it was down 130 today. I'm talking about the S&P, but it's still down 105, and that number 100 is it's in play. It's in play like 3,800 was in play, and 37. The amazing thing was that at 4 o'clock, the market went above the Soji level. It was 36.54. And then
the margin
5
call.
minutes later, it was 36.06.
Right.
So that the market's really revolving around, and volume on the exchange was probably at one of the highest ever. It was volume in the E-minis was 2.5 million shares. That's bigger than almost the entire stock market's total trading. Probably one of the 10 highest ever. And yet, the volume in the spiders, which is comparable to the E-minis, was the 20th largest of any stock today. There were 19 stocks that had larger volumes. So today was a great day for, in general, the infrastructure, because there was tremendous volume. I'm sure all the brokerage houses were able to liquidate a lot of their customers and take the opposite positions. And there were tremendous bid-ask spreads. And so it's in line with the general principle that the house must always win. And sometimes in order to win, there were 4 new all-time highs in a row. And guess what? Everybody was talking. I got messages from quite a few of my colleagues. What's happened to the market? It's become so quiet. Yeah, aren't they? Have they just gone? Has everybody gone to sleep? Well, yeah, the market had gone down to 37.20 a few times and then jumped right back to the Soji level. So naturally, today, everybody was thinking that the market's very lethargic, that as soon as there's a small decline 25 S&P points. We'll go right back to the Soji level, which it did four times in the previous days. And all those people were caught. And that brings up another one of our general principles. Never try to make money the same way twice in a row. Everybody who tried to make money by buying a small dip, in this case, when buying it when it was down 15 or 20 points, they lost their shirts. And when you think of it, when the margin on the E-minis is 13,500, and the margin on when you have a position, that's the initial margin, but
Right.
the margin when you have a position is like 7,000, 8,000. So when the market's down, as it was 150 points, that's $7,500 a contract. Anyone who was long would have been liquidated. They wouldn't have been able to meet their margin calls, and that usually happens around 3 p.m. liquidation time, belly up, cry. And that I'm sure exacerbated the decline. But as Partridge said, we're in a bull market. I noticed that soybeans continue to go up. Bitcoin held the 32,000 level. And within a day, I don't know if it's going to occur at 2 a.m., whether there'll be a little squall, temporary squall tomorrow. We should be back to the new highs. So I noticed that Janet Yellen is monitoring the situation. I was listening to the Pirates of Penzance last night, and Gilbert was a very mean. He was his satire was very bitter, but he had one fatal flaw. He loved his young sopranos, and he paid a lot of attention to them. And my grandfather was very famous for that. He was famous for teaching the young beauties on Brighton Beach at Pier Bay 2 how to swim. And once my grandmother got very upset with him, and she hit him on the head with her umbrella. But that was very mild, because Gilbert liked to teach all of his young sopranos, especially his favorites, to swim also, and he had a private lake on his property. He earned a lot of money. They say the equivalent of $10 million from the operas with Sullivan with a big suit. Which anyway, he was teaching one of the sopranos how to swim when he was 74 years old, and he drowned and died. And so that was some of the writers say that was a very appropriate way for a man of Gilbert's predilections to die. In any case, Janet Yellen, who's the agrarian economist, one of my favorite economists, calls her, she's something, he said something to the effect that she's the agrarian without agriculture, or she's the economist without agrarianism. In any case, she and Jay Powell will be monitoring the situation, and they'll be doing something to help the progressives along. But they had to do this temporary thing because the market was getting out of hand. And as we said, it's not cricket. It's not cricket for the market, for the public to be making money at the expense of the big boys.
Right.
Now,
Actually,
go on.
SEC issued a statement just now after hours, also saying that they are monitoring the situation actively. All the ongoing market volatility in the options and equity markets, consistent with our mission to protect investors and maintain fair, orderly, and efficient markets. We are working with our fellow regulators to assess the situation and review the activities of regulated entities, financial intermediaries, and other market participants. So they may even subpoena information from Reddit from the Wall Street Bets boys and see if they're colluding, or they could do anything they want. I mean, if SEC is after you, it's not gonna be fun. But the Wall Street boys are not scared, and the Robin Hooders also not scared. The GME stock is still at 320, and nobody's selling.
My son secretly shorted some GameStop, and I had a lot of health procedures today, and but you know, there's a larger picture. This is all related to politics in a sense, because now there's a lot of canceling and re-education programs for those who weren't woke enough, and all the big media the social media have increased their vigilance against non-woke. So you and I better watch ourselves. We have to let everybody know that we're as progressive as the next person. By the way, has YouTube finished their monitoring?
Just recently, they have approved our videos, so they're done monitoring them.
Well, it's amazing. You know, I feel that between us, you know, we're a very good combination. You probably don't know about Abbott and Costello, but they were the most popular duo of their day. And between us, we really can illumine things about the market that no one else can. And sometimes a critic can actually transcend the thing he's critiquing. And a lot of times our insights are sui generis, but no one's watching our
Well, maybe after today, you've been such a great prediction for the last 2 days. I'm hoping our readership will improve dramatically.
I don't know. First of all, it's like when you have a hot shot in basketball, they say there's no predictivity for the future shots, and it'd be accurate today and inaccurate tomorrow. So,
Right, but that is the problem with predictions. Nobody can ever possibly be 100% correct. So it's the kind of world that you actually have to make some prediction knowing that certain percentage, hopefully less than 50, we're wrong, but
that's how I started out in business, actually. 52 years ago, I came up with a method of predicting the stock market that was audited by Leventhal and Horwath. And somehow those predictions came to the attention of the palindrome. That's another story. I mean, that's how the palindrome and I met. We met through two very colorful characters.
and for our viewers, who is the palindrome? Can we name him
Yes,
so that people
the
know?
greatest world stater. Some people consider him the greatest investor of all time, George Soros. And there were two intermediaries that between my prediction, which got memorialized in the New York Times. There was a very famous journalist named Robert Metz at the time. He wrote an article describing our predictions for the next 3 days, and like today, it happened to be accurate. And then Wink Jaffe and Graham Loving noted the predictions, and they brought it to the attention of the palindrome. And that's how I became his go-to tennis partner and chess partner. And we had an intimate relation for about 15 years. I would often, he inserted a red telephone direct line on my desk, and a normal day I'd receive 25 calls from him asking for my predictions. They weren't very helpful to him, but sometimes he had a way of saying that somehow if he's losing money, that makes him stronger. My predictions were pretty good. I was in general, of course, going with the drift of 50,000-fold a year, you're on the right track. And I will be on the right track again, I believe, very shortly. And Mr. Partridge will come to the fore. Now, I was saying though that all this is related. I mean, the backdrop is the progressive agenda has to be maintained, and it has to continue. Okay, well, everyone gets the idea. Let's,
Well, speaking of progressive agenda, uh, Biden just started to the committee to reform the Supreme Court. So you were right, and I was wrong. I thought he wouldn't do it, at least not anytime soon. But
and there's a bill to add Washington D.C. to as another state, and there was an education, no, an assistant DJ who's even more liberal than the vice president. There was a special section in the Los Angeles Times all about the vice president. So we're continuing, but normally, as you know, the more woke we are, the greater the stock market rise, and the woke will have its day, and you and I will be memorializing it and urging it on so that we don't get fired. Thank you, Ms. Senate.
thank you, Victor, for your great predictions. See you
Oh,
tomorrow.
I hope I'm more than a prediction to you.
No, definitely more. But
Okay, thank you. Okay, goodbye.
bye.